Ladies and gentlemen, good day and welcome to Mazagon Dock Shipyards Q4 and FY24 earnings conference call hosted by ICICI Securities Ltd. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I'll hand the conference over to Mr. Amit Dixit from ICICI Securities Ltd. Thank you and over to you, sir.
Thanks, Neha. Good evening, everyone, and welcome to the call today. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management, we have today Shri Sanjeev Singhal, Chairman and Managing Director, Additional Charge and Director Finance, Shri Biju George, Director Shipbuilding, and Commodore Vasudev Puranik, Director Corporate Planning and Personnel. Without much ado, I would invite Shri Singhal for opening remarks, post which we will open the floor for an interactive Q&A. Thanks and over to you, sir.
Good afternoon, everybody, and welcome to all the participants for this meeting. As far as Mazagon Dock Shipbuilders is concerned, I think the results are already available with you, and it has been a good performance. In fact, the best ever performance since inception. Incidentally, this was our 250th year. So on 14th of May 2024, we have celebrated our 251st Foundation Day. So this has been a long and phenomenal journey, starting from a small dry dock in 1774 and today reaching to these heights when our revenue from operations is significantly higher than $1 billion. So this has been a quite interesting and exciting journey for all of us, and I believe for the investors also. Without taking much time, we can straight away go to the question and answers. Whatever clarifications the participants are looking at, we'll be more than happy to satisfy their queries.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit from Aditya Birla Sun Life Insurance. Please go ahead.
Thank you for this opportunity. My first question is more to do with the liquidity damages provision right back that we have been doing for almost like 2 years. Is this come to an end, and what is the status here, sir? Like, is there any more additional write back we are expected to do in FY25? And the margin, do we expect it to normalize to say 7.5%? I'm talking about the EBITDA margin.
With respect to the LD, we have total supplied 5 boats, 5 submarines to Indian Navy till date. We have received LD refund corresponding to 1 submarine in 22-23 and corresponding to 2 submarines in 23-24. So as such, for balance 2 submarines which have been already supplied to the Indian Navy, the cases are still under examination, and at least one of the cases I believe has come to a maturity stage, so that LD refund should be coming anytime soon. And with respect to one last boat, it is still under analysis. Difficult to commit the timelines. Regarding
if you could,
yeah,
if you could quantify that number, I said how much is the LD provision right back in month so far?
The total LD approximately deducted against these 2 boats which is pending would be around approximately 300 crores. What would be the refund? It will depend upon the decision finally taken by the Indian Navy with respect to the delay attributable to MDL and what is not attributable to MDL.
Got it, sir. My second question is more to do with the P75 add-on submarines, where you were at the cost benchmarking stage last time when we had the discussion. What is the stage at which they are now?
The cost discussions are still going on, not yet finalized. It would take some more time, but I think it is likely to be finalized soon.
Further, sir, any update on 75 technical completion?
75I, as far as the field evaluation trials are concerned, corresponding to the bid submitted by MDL in collaboration with TKMS, we understand that the field evaluation trials have been successful. With respect to the other bid submitted by L&T along with Niventia, we are not aware with respect to the status of the field evaluation trial as of now.
Thank you, sir. I will get back in the queue.
Thank you. The next question is from the line of Sagar Gandhi from Invesco Mutual Fund. Please go ahead.
Sir, my question is a follow-up question on the 3 add-on submarines with AIP. Sir, possibly will it close in FY25?
Yeah, we very much believe so.
Okay. And the P75I project will be FY26 or FY27?
FY26, in the normal course, it should be in FY26. If it goes beyond, then we feel it is delayed.
Okay.
Yeah.
And sir, our pending execution of the destroyer project is close to 32,000 crores.
No, pending execution is 11,216 crores. The order value was 32,081 crores. We have already delivered 3.
Yeah, I'm sorry. Yeah, 11,216 crores.
Yeah.
So because this is likely to get delivered in FY25,
yeah,
a substantial portion of this will be booked in this year only. Is that understanding correct or wrong?
No, it will move to the next year also partly because at delivery our warranty obligations are not getting released. Yeah. And B&D spares, there is base and depot spares also need to be procured and given to the Navy. So there are various kinds of expenditure which goes beyond delivery period also. So the entire thing will not get liquidated at delivery.
Okay. And sir, regarding a destroyer project, which was I think roughly 36,000 crores, that will be post FY27 only. Is that understanding correct?
Yeah. So that right now is at a very preliminary stage. So in the Navy, the naval side also it is not at crystallized fully. So at this point in time, we cannot draw any conclusions as to when we are likely to get an order. So we are in the preliminary discussions with the Navy, but in the near future, Navy also intends to take it forward.
Oh, thank you so much.
Thank you. The next question is from the line of Pranav Furia from Antique Stock Broking. Please go ahead.
Thank you for the opportunity, sir. I just wanted to confirm, have we booked any liquidating damages right back in this quarter, particularly Q4?
Yeah, Q4 we have booked liquidated damages right back corresponding to 1 submarine.
So, could you quantify the amount, sir?
Approximately 141 crores.
Okay, sir. That would very helpful. Thank you.
Thank you. The next question is from the line of Yash from Stallion Asset. Please go ahead.
Hi, thank you for the opportunity. So my first question is that, so you've given the pending execution for a destroyer. If you can just tell what is the pending execution for one of the first, the 17A frigates, which is going to be delivered in FY25. I think that's a 27,000 crore project.
Yeah, we are targeting delivery of the first frigate during this financial year. If the going plan, then maybe 2 frigates within this financial year, otherwise 1 this financial year and subsequently 1 more in next.
Okay, and so approximately how much revenue would we be booking out of that of the 2 of the frigates then?
We'll have to see it, because when we are delivering, the ships are not fully complete. They are accepted by the Navy with certain riders and certain deficiencies, which are completed during the course of time. So assigning a figure right now, that may not be feasible with respect to revenues.
Right, sir. So maybe, because I'm just trying to understand, because we've got so much execution going on, in FY25 with so many deliveries. So do you believe that overall, broadly, we'll see a very large revenue recognition in FY25, maybe, broadly 14,000-15,000 crores? Because we've already got the destroyer, in this year, then we've got the first of the frigates this year, and this is apart from your other, export orders and everything. So what do you believe, what FY25 sort of, revenue guidance?
Without assigning any figures, I can only say that by 22, 23, 24, our revenues have been increasing every year, and we believe that the same trend is likely to continue for FY25. But right now, we have not made a deeper analysis with respect to the concrete figures. So I would not be assigning any numbers right now.
Sure. And so in FY25, maybe what would be the order book at the end of this year, given the execution that you are, planning and the new order bids that you've submitted? So broadly, you think we will have about 40-50,000 crores of order book by the end of this year, or the number can be much higher?
It depends upon the materialization of orders. Smaller orders we are, but they don't make much of a difference. Additional submarine is one big order, which we are eyeing at, and believing that if this gets finalized during this financial year, the order book should see a substantial post-execution. Of course, some liquidation would be there during the year, but there should be a big addition.
So could you sir quantify like how much, when you say big, you think 25-30% jump on the existing order book broadly?
We have submitted our price, which is currently under discussion. So I will not be able to elaborate it further on this.
Okay. Got it, sir. Thank you.
Thank you. The next question is from the line of Swechha Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Thanks for giving this opportunity. So I just had a follow-up. I just wanted to understand on the current order book. First of all, the current order book, if we execute, over the next 2 or 3 years. And so I wanted to understand, which year is it likely for us to reach like a peak revenue, because some of the deliveries will, coincide in the same year, right, for frigate and for destroyer. So, having that, if you could just give a broad sense as to will FY25 will be the year where we are going to reach the peak revenue on the current order book, or FY26, or you think it can be FY27 also?
As far as the current order book is concerned, FY25, fairly we are poised for maybe the highest revenue.
Yeah, we'll be delivering one destroyer and one frigate.
Because we are targeting 3 deliveries during this year, 1 destroyer, 1 frigate, as well as 1 submarine.
Okay.
With the addition of the fresh orders, which are also a higher revenues can be very much there.
Right. But on the current order book, FY25 will likely be our peak revenue, right? Okay. And so just another follow-up was this additional submarine order that we are, trying to get. Could you quantify the order book size for it and how many submarines, sir? I think I may have missed that number somewhere.
Additional submarines, we are in discussion for 3 additional submarines.
Okay. And what would be the order book, sir? Like the order?
We have submitted the prices which are under discussion.
Okay.
Beyond this, we will not be able to discuss on this right now.
Okay. And so just one last question. In terms of our bidding pipeline, is there any other, ships that we are planning to bid for apart from these additional submarines, and, what kind of already have in terms of value?
We have under discussion the next generation destroyers. We also have under discussion the follow-on frigates for under Project 17 Bravo. There are projects which are under discussion at various stages, apart from P-75I 6 submarines. So these are the projects which are at various stages of discussion and maturity. So they will be taking certain time, but I believe, considering the geopolitical situation, the projects need to be finalized by Indian Navy.
Okay. And so would you be able to even give a broadly sense that what these three together would quantify into order book if you get these?
I can only say, as far as 75I is concerned, what is available in public domain, that is the AON cost, which is 43,000 crores, which was published in 2018. So it is 6 years dated cost. So as on date, maybe you can add certain escalations on that.
Right.
And with respect to destroyers, our existing destroyer order is 34,000 crores approximately for 4 destroyers, which was 2011 order. So that is approximately 8,500 crores per destroyer in 2011. So any next generation destroyer which is likely to be significantly larger and more complex, more weapon intensive, and with the escalations, so maybe you can take a view with respect to the magnitude of in terms of costs.
Okay, sir. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Viraj Patel from JK Global LLP. Please go ahead.
Good afternoon, sir.
Yeah, please go ahead. Good afternoon.
Okay. My question is, what is the status on the order of 3 submarines worth 20,000 crores by the government that you were waiting for approval?
Yeah. As I said, is it with respect to additional 3 number submarines which is under discussion?
That you have mentioned earlier in the concourse?
Yeah, we have submitted some prices and which are being examined and are under discussion currently. We expect, during my previous reply in today's phone call itself, we expect that order is likely to be finalized during this financial year.
Okay. Sorry, thank you.
Thank you. The next question is from the line of Rohit from Aditya Birla Sun Life Insurance. Please go ahead.
Thank you for the follow-up. Sir, if I strip off this liquidity damages right back, your margin is actually still very high. So how should we really appreciate the existing work or the pending work to be done? What kind of margins, excluding the provision right back, we can conclude at?
There is also approximately 400 crores of income on account of additional interest income during 23-24 compared to 22-23 on account of improved rates of interests and higher deposits. So this also is a non-operating kind of an income, not related to production. Apart from this, what we have indicated earlier also, whenever we are in a position or when we deliver a platform ahead of schedule, that has a very positive impact on the costs, because the costs for the period are saved, which is a very significant chunk. We did 3 deliveries, 3 destroyers during 3 years, one in 21, one in 22, and another in 23 calendar years. The destroyer which we delivered in 23, this was delivered almost 5 months ahead of schedule. The corresponding schedule was March 24. We delivered in October. So this has a significant sobering effect on the costs, which contributes to a better margin. Going ahead, as far as 4th destroyer is concerned, we are again targeting to deliver significantly ahead of schedule. As per the contract schedule, the delivery date is February 25. We would like to deliver it early. As far as frigate is concerned, this being the first of the class, first of the project 17 Alpha, the endeavor is that we should be able to deliver it in time. This itself would be a big achievement. And going ahead, we can look for deliveries prior to the scheduled date of the contract. So,
Got it.
applying some of the factors which have been responsible for better margins going ahead, it would always depend on the physical performance on ground.
Got it, sir. That was really helpful. From a MOU excellent with government rating perspective in FY25, what could be your revenue target or maybe margin target as well? Any color on that?
For excellent rating, the revenue target I expect to be something around close to 10,500 crores.
And any color on margins, sir? PBT margins or something of that sort?
Margins should remain in the similar range, maybe slight increase government may propose.
But this will be X of that liquid damages right back and some cost increases, or is it you maintain the same level?
So normally your targets are not assigned with so much detailing. Targets are normally on gross level.
Okay. Thank you, sir. That's it.
Thank you. The next question is from the line of Bhavesh, an individual investor. Please go ahead.
Good afternoon, sir. Congratulations on a great set of numbers. Just wanted to get an update on the ONGC pipeline order, which was supposed to get executed this month. So is it on track?
Yeah, the order is still under discussion. We're expecting by May this will be finalized, but I think some delay is there, so not likely by tomorrow. But the discussions are in place.
So it's still under discussion and it's not started yet.
No.
Because in your PPT, slide number 15, it says that project worth 1142 crores are still pending. Like I thought that it is the ONGC order project, but it's not, right? It's a different project.
Are you referring to the
slide number 15 order book?
Yeah.
So in that there is a section heavy engineering, and in that there is a subsection of others. So you have mentioned 1142 crores as some other.
This is the order which we received in the month of December last year, which is under execution currently.
The ONGC one.
With ONGC. I thought you are discussing with regard to the second order for which is under discussion and which we
this is not in the public domain.
There is certain delay in that, likely to materialize anytime soon.
Okay, but the first order
is under execution.
So it will get executed this month? Like you will get the money, like the money will be realized in this quarter, 1100 crores?
This financial year.
This financial year, okay.
Yeah.
Achha. And sir, you have cash around 14,000 crore plus. So how do you plan to utilize such a large amount? Like you are the second defense company which has more than 14,000. Like the first is HAL, then comes Mazagon, and the third is Bharat Electronics. So you are positioning yourself on second in terms of cash and cash balances. So how do you plan to utilize that cash?
A substantial amount of this cash, which is visible in our balance sheet, belongs to Navy against the project. So this is not free cash. Free cash, which belongs to MDL, would be around 4,000 crores. We have recently acquired a 15 acres piece of land adjacent to the existing premises of MDL, where we would be incurring a significant amount of capex over the next 2-3 years, including we will also be incurring significant capex on the development of Nava Yard. So these two areas would be making MDL future-proof with respect to the infrastructure constraints, whatever are there today. Although we have capacity to construct 11 submarines and 10 warships simultaneously at the existing premises, but considering that the future platforms are likely to be larger in dimensions, with a deeper draft, we would be investing significantly in capacity addition.
Great. That's it, sir, from my side. All the best. Thank you.
Thank you. The next follow-up question is the line of Sagar Gandhi from Invesco Mutual Fund. Please go ahead.
Yeah. So my question pertains to the order pipeline. You mentioned about P-17B project. So this is what quantity, what number of frigates?
P-17B is also likely to be like a repeat order, 7 ships shared between maybe a couple of yards. So the total requirement is 7.
Okay. And the order value will also be, the last order value plus cost
So that
inflation.
you can extrapolate because for four how much it was and when the order was placed. So
No, I understand that. And sir, for destroyers, what is the quantity that is likely to come?
for the next generation destroyer.
Yes.
Yeah. So that is 4.
So that is 4. And sir, apart from these 2 orders, ship repair pipeline and this additional orders that you mentioned about ONGC. So can you give us some color about what is likely to come over the next 1.5 years?
There would not be, we are not privy to any plans regarding ONGC. So whatever their requirements are there, they come out by way of a tender. So only then we come to know what is the requirement. So it would be difficult to assign any kind of a number to that, what would be their requirement in future. With respect to Navy, yes, they come out with their perspective plan, what requirements are there. So based on this, we have indicated next generation destroyers is there in pipeline. 17 Bravo frigates are there, follow-on frigates are there. 75 I submarines are there. Additional submarines are there. In addition, there would be requirements which, as and when they come out, requirements from other agencies like Coast Guard, and we are also scouting for the export orders. So we are in a discussion with various countries, including Malaysia, Brazil, Indonesia, UAE. So we have, in fact, we have invested considerable time, energies, and resources in these areas over the past few years. So it takes time before these naval orders materialize. We expect some positive responses in future.
Yeah. So sir, in this respect, I'm not asking you the type of vessel, but broadly, will it be a large opportunity, $500 million or something like that?
No, as far as the export orders are concerned, it will be primarily commercial. So we don't expect to be anywhere comparable to the destroyer or submarines or frigates. But at the same time, these would be strategically important to establish our strong foothold in the export market also.
Okay. And sir, regarding our peak revenue in FY25, sir, these 3 additional submarines that we are likely to get, their execution timelines will be lower than our previous experience of executing submarines.
Yes,
so
definitely.
Yeah. So in that case, say maybe 1 year there may be some dip in revenue, but post that again execution will start for the submarines. Then we can again,
Yeah, overall timelines will definitely be lower, but granular breakup financial year wise, it will be difficult right now until the order and the specifications are actually crystallized and received. What kind of collaboration is involved, what kind of equipments, whether what is the indigenization content, how much is a repeat kind of a thing and how much is new. So it will, and detailing and designing, etc. It would depend on that.
Okay, but you believe 5 years is a reasonable timeline for execution?
For 5 to 7 years.
5 to 7 years.
Depending upon the requirements.
Okay.
If there is a significant change in the requirements, it may entail a higher timeline. But if it is a plain repeat order, then yes, 5 years is good enough.
Okay. And sir, my last question is on CapEx that you highlighted. So CapEx plan will be for how much rupees and over how many years?
We expect 3,000 crores over the next 3 to 4 years.
3,000 crores?
Yeah, 2,500 to 3,000 crores.
Okay. Initially, sir, when during the IPO time, we had mentioned that Nhava Sheva yard, which we are likely to develop, that will entail a capex of 1,000 crores. You are saying additional 1,500 crores capex over
For the additional land which has been acquired recently, 15 acres, we would be developing that plot also.
Okay. And that will have capacity to.
Sorry to interrupt you, sir. I request you to come back for a follow-up question.
Sure, I'll do that. Thank you.
Thank you. The next question is from the line of Gangan Thareja from Ask Investments Manager. Please go ahead.
Yeah, good evening. Am I audible?
Yes, please go ahead.
Yeah, sir, regarding, the deliveries for next year, you indicated that warranties and certain spares, the revenue booking will spill over in the year after FY25. Generally, what is the proportion of warranties and spares on an average in any order for delivery?
Yeah. So, it is not the absolute value.
Yeah. No, I am looking at a percentage of, generally as a percentage of any order.
So for example, in a 27,000 crore order, 3,500 would be spares.
Okay.
Yeah.
And warranties would be how much?
We are unable to quantify. I'll put the thing in perspective. For example, post-delivery, during the warranty period, these ships are deployed in, for example, in the Red Sea. We do not know what would be our liabilities. So that is why the future expenditure is also there.
No, I get that, sir, but Red Sea is, like an exceptional event. I am saying in the normal course of your history, deployment, post-deployment, what has been your experience on average warranty?
Yeah, so we have two kinds of warranties. One is warranty getting extended with the firm up during the guarantee period. Then, if during the guarantee period of the platform, all the equipment and systems, certain things we are not covering warranty, but it will be like on need basis. So that is how we cover the warranty for the equipment and systems. So it has not been a uniform kind of warranty requirement because, as you know, system A may be absolutely all right in the first ship. Second ship, it is another system which will be demanding a warranty attention. In the third ship, it is a different set of equipment. So there is no uniform kind of statistics available.
Yeah, but there would be a median, right? I know that it will vary, but there will be a median and average. If the variability is too high, perhaps you could give a median rather than a mean.
Yeah. So definitely there is a mean, but it has been fluctuating. That's what I want.
Yeah, but would it be possible for you to enumerate or give the numerical value of the mean?
That I have not calculated the thing. What would be the percentage of the total value, etc.
Okay, all right. And on the P75I, will the orders be given to? Will the orders be split between the two bidding entities, or will it go to one entity as a whole?
One entity as a whole.
Okay. All right, sir. And regarding the sizable capexes that you are undertaking, if you could help us understand, give us more context into are these for shipbuilding? Are you expanding capacity for submarines also? You signed a master repair agreement with U.S. Navy. Are you therefore looking at building up ship repair facilities also? It would help to understand, where exactly all of this capex is going into.
Yeah. So we have our expansion plans as regards the capex in two locations, as CMD mentioned. One is in the adjacent land which we have recently acquired, as well as in our Navasheva facility. Both these facilities will have a cross-functional kind of arrangement where one can act as a feeder to the other and vice versa also. and it is for shipbuilding and ship repair, so that we are primarily looking. Submarines, we are able to handle with the existing facility for the future workload. So with this expansion, we will be able to take higher vessels of larger dimensions, and we also will be able to repair bigger vessels, both from the both the naval assets as well as commercial vessels.
Thank you, sir. I will get back in with you. Thanks for taking my question.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Hello. Good evening, sir. Thanks for the opportunity. All my questions are answered, sir. And congratulations for a wonderful number. Thank you.
Yeah, please continue.
Yeah, thank you. The next follow-up question is from the line of Swechha Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. I just have a couple of follow-ups. So one, I wanted to know, once we complete this capex from both the two facilities, if you could give some sense. I know you did mention, in the earlier answer that we will be able to take bigger vessels both on the shipbuilding and the repair side. But if you could give some sense, once both of these capex, are done, how many ships can we build at the same time, or how many can we repair parallelly, including these two facilities?
Okay, now we will be giving. So we have a broad definition in place, and based on that, we will be appointing a consultant who will be assessing the facility, looking at the businesses that is in the horizon, and map that to the infrastructure development.
Okay. Sir, and if you could give some sense as to, yeah.
How many ships? It depends on what is the size of the ship, and what is the number of ships will come in an order, and what is the delivery timelines. There is an inter-ship gap between two ships. What is the gap available? So, but we would have at least doubled our capacity when the three facilities are in place.
Okay. And sir, in terms of ship repair revenue, some broader sense as to say after 4 or 5 years down the line, what percentage do we envisage our ship repair revenue to be as a part of the total revenue?
Yeah, that will be very minuscule. In the next 4 years, the infrastructure will be, for development of the infrastructure itself, it will take 3 to 4. Revenue from ship repair, it's maybe 6%, 5 to 7%.
Actually, in spite of repairs having a shorter cycle, primarily we are a yard for new build. So this is our focus area remains on the new build.
Right.
We don't expect a revenue share of more than 5 to 7% from the repair segment.
And we have only one dock in which we are undertaking repairs.
Right. Okay, and so my last follow-up is, the bidding pipeline that we talked about, the next-gen destroyer, follow-up P-17 and the P-75I. Just wanted a clarification that we've not bid for these, right? We will be bidding for these going ahead.
The tenders for the next generation destroyers or 17 Bravo are still not out. 17 Bravo, we expect a repeat order kind of a thing, quite possible on nomination. And next generation destroyers also depending upon the capability and capacities of the existing yards. So that contours are still not known whether it will be on nomination basis or multi-yard or on a purely competitive basis. The tenders are still not out, but the discussions are there.
Okay.
With respect to the requirement.
Okay, and the P-75I?
P-75I, we have already submitted the bids. Last year, August, we had submitted the bids. Currently, it is under evaluation. The field evaluation trials with respect to MDL, TKMS combined have been successful. The field evaluation trials with respect to Navantia and LNT, we understand, are underway. So it will take some time for the evaluation and other things to be crystallized.
Okay. And so what I understand is you said that this will be this order.
I request you to come back for a follow-up question.
Okay. Thank you.
Thank you. The next follow-up question is from the line of Sagar Gandhi from Investor Mutual Fund. Please go ahead.
Sir, the new CapEx that you mentioned to accommodate larger vessels, will it also accommodate aircraft carriers?
We are floating a tender to assess the total land area and the sea area available, and what kind of water depth is available. So the consultant would be coming out with a full plan with what kind of vessels, what max dimensions, what max draft can be accommodated. So that would provide a better clarity.
Okay. Thank you. That is it from my side. Thank you.
Thank you. The next follow-up question is from the line of Viraj Patel from JK Global LLP. Please go ahead.
Sir, my another question is that what are your expectations of budget expenditure on defense, and what percentage of growth are you expecting in next 5 years due to the budget allocation?
We have never been focused with respect to the defense budget or defense allocation because the budgets have never been a constraint as far as defense requirements are concerned or naval requirements are concerned. So what we understand is the requirements are there, and as and when the requirements are crystallized at the level of Navy and the orders are placed, the funds would be provided for. Taking the geopolitical situation into account, we believe that there is a significant requirement. The total length of the Indian coastline, 7,500 kilometers, the geopolitical situation. So we foresee significant development in future.
Okay, sir.
Thank you for your question. The next follow-up question is from the line of Yash from Stallion Asset. Please go ahead.
Thanks again for the opportunity. So I just wanted to confirm a couple of data points. So could you confirm if your capex is 2,500 to 3,000 crores for the next 3 years?
Yeah, next approximately 3 to 4 years, depending upon the crystallization of all the reports and then placement of orders with respect to execution.
Okay. And so just, I wanted to better clarity on your the pending order execution. So you said that for the destroyer project, we have 11,200 crores pending order. How much would it be for the frigate?
Frigate would be approximately 17,000 crores.
Okay. And for the submarine, the one submarine that we'll be delivering this year?
That is submarine and spares, etc., approximately 3,000 crores. The Coast Guard vessels also 3,000 crores. And the foreign order, export order is 350 crores. With respect to medium refit and life certification of the submarine, approximately 2,000 crores, and others 1,500 crores.
Okay, so broadly, if I can get the math right, so 11,200 plus about 17,000 plus your 3,000 crores for the Coast Guard, another 3,000 crores for your submarine, and how much you said for the exports, sir?
MRL's medium refit and life certification 2,000, exports 350 crores, and others approximately 1,000 to 1,500 crores, total 38,000 crores.
Okay, got it. So this is broadly order book right now, as of Q4.
Yeah.
Okay. And you intend to maintain that run rate for the next couple of years?
As far as the execution rate is concerned, we can say with respect to the execution rate, with respect to the order booking, there are a number of factors on it which it will depend. If I get a large value order today, this order book would shoot up immediately.
Got it, sir. Thank you.
Thank you. The next follow-up question is from the line of Gagan Thareja from Ask Investment Managers. Please go ahead.
Yeah, sir, are landing platform docks also in the pipeline? It's been something which has been spoken for a very long time, but not happened. But of late, your peer companies also seem to talk about it as potentially there in the next near future.
Yeah, we are not in the fray for LPD.
Okay. Would you be there in the fray for next generation corvettes and survey vessels?
Yeah. See, NGC, the RFP there, so we are there, the next generation corvettes.
Okay, but not for the survey vessel?
Sorry?
Survey vessel, next generation.
Yeah, that as far as I know, that will take more time. NGC is out. The RFP is out.
Right. And basis the Navy's long-term perspective plan, over a 10-year time frame or maybe perhaps a 10, 15-year time frame, what is the potential sort of procurement by value that Navy could order, between now and the next 10 years?
As a shipyard, we are not privy to the Maritime Capability Perspective Plan. That is an internal document of the Navy. But whatever projects we have decided is what has been, that is there in the public domain also. That's how we also know about it.
Okay, right. And so coming on to, the 3 deliveries that you have planned for next year. In fact, you said two frigates possibly if you can get it done on time. That alone would be on an average, one frigate would be 6,000 to 7,000 crore basis the order size and number of frigates. So 2 frigates could be, something around 13, 14. One pending delivery of Bravo is around 11,000. So that's, a very sizable number of more than 20,000 crores plus the submarine. So you're talking of almost 25,000 crores. And even if I knock off, spares which you indicated was roughly 15%, and perhaps warranties of another 5, 10, even 10%, you're still talking of 3/4 of almost 24,000, which is, almost 17, 18,000 crores theoretically possible sales invoicing next year. Is the math very wrong, what I'm talking about?
What you are talking about is the gross value of these assets, whereas all these assets are at certain level of even today. So revenue booking corresponding to these milestones has already taken place. So I will not give entire revenue during the year of delivery.
Okay, I understand, sir. Is it possible to enumerate how much would already have been booked out of, what you'll deliver next year?
That could be slightly difficult, individual vessel-wise, how much revenue booking has already been done. Those figures would be available. These are not readily...
But sir, when your presentation mentions the pending value of what needs to be booked, right? So if the pending value is 3,500 crores and 11,000 crores, submarine and T-17 Bravo, then by default, the pending value alone is 15,000 crores there, and one frigate pending delivery, the 2 frigates pending delivery, the value itself, pending value is how much of the total frigates that you are left with?
Right now, if we discuss with respect to frigates, the order value for the 4 frigates is 27,000 crores, of which 1,000 crores has already been booked as revenue. Approximately 10,000 crores has already been booked as revenue. None of the frigates have been delivered.
Right.
Balance 17,000 crores represents the balance of carried out all the 4.
Right.
And this will also include certain components towards base and depot spares, towards warranty obligations. Similarly, for 15 Bravo destroyer, although only 1 destroyer remains to be delivered, this 11,000 crores does not reflect the balance spending value for 1 destroyer. This also reflects the value of the base and depot spares for the entire project, the warranty obligations for the entire project. So this need not culminate on the delivery of the 4th destroyer. Similar would be the case with respect to the submarine. The 3,500 crores I am not going to book on delivery of the last submarine.
Correct. I get you, sir. What I'm simply
pending activities, which may take time, maybe a year or more.
Agreed. What I'm simply saying is, if the pending value of frigates is 17,000, they might all be at different stages of execution. But for hypothesis sake, if I assume they are all at the same stage of execution, then for 2 out of, this was for how many? For 6? Or for 4? 4, right. So, 2 is roughly half of the pending value. I'll knock out the warranty and, the spare. So just for the sake of counting, right, 11 plus, I take half of 16, let's say 8. 11 plus 8 is 19. 19 plus 3.5 is 22,500. I knock out, at least 20% for warranties and spares out of that. So I'm knocking out 2,000 for,
conservative. 20% of the balance value, whereas
yes.
It would be 20% of the project value. 15% based on depot spares, in addition the warranty guarantee charges. So it would not be 20% of the value which is visible now. It would be in the range of
total value.
12 to 15% of the total project cost.
Agreed. So we'll then adjust accordingly, and then can we say that whatever figure we comes to is a possible invoicing for Mazagon in the coming year?
We have not calculated in that fashion, so I would not be able to say that your assumptions are valid. We have not worked out in that manner.
Okay. All right, sir. Thank you. Thank you for at least helping us understand this in a little more detail. It was very helpful. Thank you. I'll get back in with you.
Thank you. The next question is from the line of Jayesh, an individual investor. Please go ahead.
Thanks for the opportunity, sir. Just wanted to confirm/clarify on a couple of things. One, there was a news item that the Navy has come out with a revised RFP for P75I for 60,000 crores. The initial RFP was for 43, but there has been a revision in the terms and it has come out recently. I just thought I'll check with you if that is the case or that is not the case.
We are not aware of this.
Okay, so that's one. Second is, if you can just indicate what is the liquidated damages for FY24. I heard that in the last quarter it was 150 crores, 149 crores odd, but how much is it for the full year?
Approximately 300 crores.
So it's 150 crores per ship, I mean, broadly, for the 2 ships. And there is, of course, still 2 more which will come through in FY25, likely, assuming the Navy approves it.
One is nearly crystallized. Regarding the second one, I cannot state with me right now. Under evaluation.
Correct.
Depends.
And then, I mean, again, the third question, of course, again pertaining to P75I. There has been a discussion that the entire process may get delayed by around 6 to 9 months because the Spain/Namibia's EIP still is not ready. To be, one of the conditions of the RFP was a Purvan EIP.
Now, we would not be able to comment on that. We are only aware that the field evaluation trials of MDL and TKMS, they have been successful.
Correct.
So beyond this, we would not be able to comment.
Sure. Those were my questions. I'll get back in the queue.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities Limited. Please go ahead.
Yeah. Hello, sir. Thanks for taking my question. I have just 2 questions. The first one is essentially that over a period of time, we have seen margin improvement. Now, even if I exclude the impact of refund of LDs and all, there has been an improvement in terms of margins, what it used to be 5-6%. Now we have seen it at a much higher level. Now, some of it has to do, of course, with the before time deliveries, and this thing will kind of persist. So just wanted to understand from you what kind of sustainable margins should we take going ahead, because this operational improvement, I think, will stay with you.
One thing we need to understand that the contracts which we are executing currently, these are on nomination basis. As far as additional submarine is concerned, that is again on nomination basis. With respect to next generation destroyers, with respect to follow-on ships of 17 Bravo frigates, These contours are not visible right now, whether these will be on nomination basis or on competitive basis. Both have a totally different scenario with respect to how many players are there in competition, or if the order is on nomination, then the margins are predefined. So not many factors would come into play when these orders actually crystallize. Secondly, considering that these projects take a significantly long period for execution, a better clarity with respect to costs and margins emerges towards the later part of the project execution. So even during the initial stages of the project execution, a clear picture would not emerge with respect to what kind of costs I am going to incur. So there would be certain measures, certain conservatism during the initial stages of the project with respect to profit booking. As and when the project progresses substantially, there is a level of comfort whereby you can book profits which are more clearly visible.
Got it, sir. The second question I have is, if you look at the budget, I mean, this of course the interim budget only. So if I look at this, what I find that the spending for Navy fleet is pretty constant if I compare it with last year. Now, given that most of the ships, in your case as well as some of your peers, are in advanced stage of revenue booking, so should we expect that there would be an ordering in FY25, or given the static nature of the event that is contemplated, it will only happen in FY26?
I didn't get your question clearly.
No, the question is that we are talking about, that in FY25 we are hopeful of getting this P75 3 submarines order. Now, with the order, you will also maybe get 5% advance. Now, when I look at the spending that has been budgeted, it is very, very constant.
Budgets are not a constraint. Whatever would be required, budgets have never been a constraint. In fact, we have been, the funds have never been an issue. As per requirement, the funds are being made available.
And what you see, the budget is for the outflow of that year. And this project that we will get, it will have its cash flows.
He's talking of this 5% advance payment which will flow. Okay. Whether that will flow or not. But our experience is that cash flow has never been a constraint or never been an issue with respect to any of the projects.
Got it, sir. Thank you so much and all the best.
Thank you.
Thank you.
Yeah, I think the time is already done.
Yes, sir. Ladies and gentlemen, we'll take this as the last question, and I've handed the conference over to the management for closing comments.
So, I'll take this opportunity to thank all the esteemed investors who have participated in this call, and we hope that we have clarified all your queries, and thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you very much.